Welcome to the Dividend Talk podcast, episode 224. 4 top dividend stocks on our Christmas buy list. Dividend Talk is your number one podcast for all things dividend and stock market related with a unique European flavour. My name is Derek from Engineer My Freedom and I'm joined with my co-host European DGI. If you want to learn more about us, please visit europeandgi.com where we have articles on dividend growth investing, including 30 European dividend aristocrats. While you're there, you might as well grab our free dividend portfolio tracker template. We also offer a premium dividend growth service featuring a bi-weekly newsletter which includes stock deep dives, dividend stock cards, and access to our dashboard with over 130 dividend growth stocks. All of this is based on our very own dividend safety analysis. But enough about that. Please grab a cup of coffee and let's get started. Hey, European DJ. We're back with a Christmas theme already. It's getting close.
Yeah. And it has to be. It has to be because this week I heard for the first time Mariah Carey on the radio. And you know, when that happens, Christmas has started. You can't avoid it. I mean, the first time when I hear it, I'm always bloody annoyed because then I know like, oh, damn it, still 3-4 weeks. Yeah. But now I thought like, okay, this year I go full into it. Tomorrow I'll buy a Christmas tree, totally tie it up and everything, so that's done. I will have my buy list ready, like what we will discuss today before the Christmas. And yeah, I also made use of Black Friday already to buy some presents. So hey, yeah. I'm fully prepared, unlike any other year.
You're fully invested. Yeah. You say Mariah Carey. In Ireland, we have a song called Fairytale of New York. I don't know if you've heard of it.
Maybe when I hear it, but
yeah, it was kind of cancelled last year or the year before because it has certain phrases in it like "you scumbag, you maggot, you cheap lazy faggot." But it is the ultimate Christmas song. Every time it's played, it would be played in every nightclub and pub constantly. Like by the time it gets to December 31st, you are sick of the song. But as soon as it's like the 4th of December, this song comes on. Everybody's like, yeah, at the end of every nightclub or pub, everybody arms around each other, we singing this song drunk, and it's amazing. So that's Christmas. So I'll send you a link. It's
wow. Really, and what was the name?
The Fairytale of New York by the Pogues.
Okay, I will listen it after this podcast.
Yeah, I'll put a link in the show notes here so you can find it easy.
Awesome. I want to go Irish. And then, you know, actually before in the lead up of this podcast, we're preparing, right? And we're actually also talking about getting together again because we made it a habit, a tradition to do a retrospective on the year with the podcast and everything we're working on, and then also to have a look forward, right? What are we going to do for the year? So, for instance, the newsletter came out of that. Also, that we wanted a new website, which is, you know, where we can start migration soon. So I really enjoy those things because it keeps us sharp, it keeps us focused, and it really helps me throughout the year. So we got to meet in January again, and we decided already that we will meet in the Netherlands this time. First time was Ireland. Last year was Warsaw, and this year will be hopefully January, maybe February. Let's plan a date. But to all our Dutchies out there, expect an invite to anyone who wants to join for a drink somewhere in January, I guess, somewhere in the Netherlands. If people have if people have a suggestion for a location, let us know. It always helps if there's a cheap stay somewhere. Yeah. So if someone has a big house and can host us, if someone knows a cheap hotel nearby or can offer us a deal, it can really help in the decision making to choose the right city. I'm really looking forward to it. I'm really looking forward to meet some of our Dutch listeners for the first time face to face.
And I don't know if you have looked at Spotify Wrapped for content creators. I
No,
don't think
I
I don't
haven't.
think you have, but some interesting facts came out of that. But our number one place that we are listening to is the Netherlands.
Oh,
Um,
okay. Look at that. Look at that.
so I'm expecting quite a few people to come out to this.
Yeah, yeah. So hey, reach out to us if you have a suggestion. You know where to find us on the Facebook group or on Twitter, or Blue Sky nowadays, or Threads nowadays, or Instagram. I mean, it's driving me nuts, this whole social media landscape. I mean, you can see it in my face already. But hey, here we are in a polarized world, and maybe there's also in the Christmas spirit a really nice bridge to start to talk about the news of the week. What do you make of it?
This week was crazy, and look, we got a question from Marcus around our thoughts on the United Health incident, and this is quite crazy because the CEO got shot in broad daylight from behind, and I don't know how you feel about that. We don't often get involved in that kind of stuff on this podcast, but this is bizarre to me. And look, I know some of our American friends are used to having guns, and it's so natural over there, but for me, this is crazy. I mean, I can't wrap my head around this. I know tensions are tight over there, and obviously, when you come to insurance, there's probably a lot of hurt on the streets because of this. And look, I don't know the ins and outs of it, but to go to the length of taking somebody's
Yeah.
life, it's quite
And what
serious.
was crazy, I read in the news that there were three shells from the bullets there, and they had words written on it: delay, deny, defend.
Wow.
I don't know if this is a true story, right?
Yeah.
Nowadays with the news, it's really hard to figure that out. But if this is true, it really refers to the tactic that U.S. insurers typically do, right? By when a claim is coming in, they just have a kind of a tactic generally to delay, deny, and defend in the end. And I think they do this with 50% of the claims that they are getting. Yeah, so this is why I say it's not just tobacco that are sin stocks. There are a lot of sin stocks there. We, of course, don't know about the motive of what happened here. It could be anything, could be in the personal space. Just a nutball, we really don't know. But I mean, come on, guys, this is insane. A CEO should be, safe in the job. This is really, really insane. It just shows how many lunatics sometimes we have in society. I mean, this may be just one idiot that does it, right? And we don't know the story behind it, so we can't judge it. We can't. We are not informed enough. But I mean, come on, what will the successor feel now?
Yeah. I mean, I look, I don't want to speculate because we're talking about a man's life here, but
Yeah,
I read a lot of insurance companies are now taking down the names of all the people that are sitting on the boards and all that from their websites just to keep people out of harm's way. And as you said, I don't
that's
know
insane.
how true or not that is, but you read a lot of stuff online. But for me, it's mind blowing. As you said, someone that's going to work should be coming home from work that day.
Exactly,
Do you know what I mean?
exactly.
And there's ways of dealing with that. But look, we don't know what drove this person to that either.
No, I
I
just
don't.
hope it wasn't the total return investor or a dividend growth investor because, well, dividend growth investors have no reason.
Yeah.
No.
I think that. Yeah. So, but look, it's quite sad. Sad that something like this has happened, and we have to speak about it. But it has. But
Yeah.
let's move on. Let's move on to Intel, shall we?
Oh,
Because Pat Gelsinger is out. What?
yeah. Our turnaround chief executive officer, right?
Yeah.
Oh my God. He started posting on Twitter again, now normal stuff after all the Bible verses. I mean, so we have competitive dividends. That's what we learned. Yeah.
Yeah.
Then what is
Laser
the other
focused.
one? Laser focused. That was also, and then starting to prey on Twitter. I mean, we have a lot of signals nowadays due to him that can warn us for other investments, right?
Yeah.
I mean, yeah. Hey, look, I really liked it when he joined Intel. I really felt like after Bob Swan, who was like financially engineering everything out of it, I felt like they need an engineer to get the company back on track. Now, there are two questions in my head. Was the company already beyond repair? Yeah. And
Yeah.
secondly, is Pat actually a good leader? He may be a good engineer, but maybe he's not a good leader.
Yeah.
we don't have we are not in the company, so we don't know about the morale of the engineers and everything, right? Was he inspiring to them? What kind of leader was it? Clearly, the business has not been developing. He has been making promises. I mean, if you take his first slide about 10% growth from now, effectively, I mean, it couldn't be further off. And you and I always feel like CEOs are should be awarded really well if they create a lot of shareholder wealth, but they should also be equally be punished if they don't. So
Yeah.
for me, that he's out, I think it's fair. Yeah, he hasn't delivered. He had like 2-3 years of time to
Yeah.
to at least show something, and
Yeah.
he simply didn't.
Yeah. I mean, he came in, and I think because he was an engineer, he came in, he was in the company, he knew the company well, and he followed Bob Swan. He
Yeah,
didn't have, I mean, we did an episode, Down to Swanee, I think we called it.
exactly.
And Pat came in, we were both a little bit overjoyous, but it, I don't know, he hasn't delivered. For me, I failed to see what their identity is. I don't know what Intel's identity is. I don't know what the
Yeah,
competitive advantage is. It's promise after promise after promise been broken, nothing
yeah,
delivered, and their competitors. I mean, they must be sitting there looking at Nvidia with green in their eyes. It must be
yeah.
envious of them. So, yeah, I think it's fair. I think it's fair. He's
And and then news comes out the other day, or speculation came out that Apple may want to buy it. Yeah,
yeah,
and then but then you really became the laughing stock of the stock market, right? Apple may just think, okay, it's now so cheap. Yeah, let's like keep the change, right? They can from that money they could buy Intel now. Yeah, effectively.
yeah,
Yeah,
yeah. So, yeah, I'm
just
not.
pause share buybacks for a year and you buy Intel, and your balance sheet hardly notices it.
Yeah, but of course, it's no longer a dividend stock anymore. They've suspended. I think.
No, no, no. So I still have some shares, right? Because it was part of a turnaround speculation. But as you know, I think turnarounds haven't done me really well. So what has done me well is like more like some growth stocks that were undervalued. With those I've done well, like Meta, yeah, the tripled, or no, I bought at in the 70 and sold at 500 at the time.
Yeah,
Yeah, so that has done me well. Google at the time, but turnarounds have really not done me well. And
it's
so
where the
that's a learning, and so
yeah.
I'm not, I'm really shying away from that nowadays. Somehow, I'm not grasping it well enough.
Yeah, I think that's. I speak for myself, but it's one of my biggest learnings. Is we spent a lot of time talking about turnaround plays on this show. I would class Unilever part of that, even though they might be showing signs of coming out of
Yeah,
that. Walgreens was one that I got bid on, and Intel. I was lucky I
yeah,
got in and got out at the right time with Intel, but turnarounds are hard for a
yeah, yeah,
reason.
yeah, yeah.
So you need
Yeah.
to have the stomach, and there's a risk there. But
Speaking of which, by the way, shout out to Russ from Dapper Dividends. He had
oh
the
man,
CEO from Agree Realty, Joey Agree, on the on his YouTube show, and he asked him 5 questions, and they also spoke about Walgreens.
yeah,
And because for me, Joey Agree is already a legend by having Walgreens as a large part of the portfolio a while back, and then he literally spoke about how he was visiting Walgreens and how he couldn't see that this company will be
yeah,
beating competition. Yeah, he really nicely spoke about like what sets them apart. You can buy toothpaste, you can buy it elsewhere, this you can buy elsewhere, that. And he was really nicely speaking about it. And he even said like Walgreens may just not exist anymore, they may have to go bankrupt in a few years from now, right?
yeah,
And you see it also in the investors presentation where he shows the whole build of Walgreens that they have done, so that it became a minimal part of their portfolio. And for me, this is such a strategic foresight. You don't really see that. But after this interview of Russ from Dapper Dividends, I'm convinced that he is really one of the best CEOs in the real estate investment trust sector. It's
yeah.
unbelievable.
Yeah, look, shout out to Ross. He gave us the honor of asking the last question as well, which
Yes.
we really, really appreciate. But I have to say, 4 questions preceding that were top quality. And
Yeah.
Joey came across as down to earth, answered everything
Yeah.
really well. And like you said with Walgreens, it's that benefit of being able to walk in around the stores. And like he said, I go in there. What am I going to Walgreens for? A
Yeah.
prescription. I can get everything else somewhere else cheaper.
Yeah. Yeah.
Um,
Exactly.
and we never have that perspective. So
Yeah. That really stood out. And maybe 2 more things about the interview. First of all, Joey Agri also mentioned like the dividend, because that was our question. Dividend will not be cut under my watch.
Sacrosanct.
So yeah, and then I'm wondering, like, how old is this guy? Our age?
Yeah,
40s, let's say. So he may still have 20, 30 years ahead. So
yeah,
there we go. Yeah. Secondly, I was wondering, we talk a lot about generational wealth, and he was speaking with so much respect about his father, how his father built the business. And I was thinking more like a father, like, how did he get his son so wise and being such a strong successor of the business? Because usually, at least my kids, they are now, my son's like a puber, that they're rebelling and everything. So the father must have done something really well, because we hear this so often, rich kids like squandering the wealth and everything, and this guy is on top of it. So I'm very much impressed, not just about Joey Agree, but also about his father.
yeah,
Yeah,
yeah. I mean, when you see rich kids, sometimes you get not all of them. I'm not going to paint them all with the same brush, but sometimes you get this essence of being a little bit spoilt, a little bit
yeah,
silver spoon in their mouth, and I
yeah,
got no sense of that whatsoever
exactly,
from Joey.
exactly. Yeah. Let's we'll link
Of
the YouTube
course,
video as well, right? But shout out to Russ when you're listening. Great interview, guy. Keep it up.
yeah. So for top dividend stocks on our Christmas list, shall I start? I will start.
Yeah. Please go ahead.
I'll start. So the first company on my Christmas list is an investment trust. I think I've spoke about them once or twice before, but it is JP Morgan Growth and Income Investment Trust. Ticker symbol JGGI.L. And the good thing about investment trusts, they are transparent in terms of their objective, their dividend policy, and what you can expect for them to achieve. So it's easy enough to benchmark your results from them. So their objective is to provide superior total returns and outperform the MSCI All Country World Index over the long term. So basically, they're benchmarking themselves against the All World Index. I don't really care too much about that. They can beat it. They don't have to beat it. That's their objective. What I do care about is their dividend policy. And their dividend policy is quite clearly stated. The company will set the target dividend each financial year equal to at least 4% of the NAV of the company at the end of the preceding financial year. And then they say dividends be paid out 4 times each month. The current NAV is £5.88 in around that, which means the dividend based on the 4% of that NAV would be 23.5p, which would be a 14% hike based on the last year. So that's what you could expect from them. Historically, the
if I may
5-year.
ask there, what is the net asset value, right? So that means like the accumulation of all the assets in the portfolio divided by the holdings or whatever it is. Yeah,
exactly.
So, and that means, is it really paying out a dividend, or is it paying out of its own? Is it selling shares? Let's say, is it selling holdings to pay out the dividend, and it speculates on more than 4% growth again to keep up for that?
Yeah, it does it on both. It depends on the holdings that they have. And if you look at their top holdings in there, you've got Microsoft, Nvidia, Amazon, Meta. Okay. And that's their top 4 holdings. They've also got some bonds and notes in there. But you look at that, you're not seeing high dividends. You're not seeing 4% that are now from
Exactly.
Holdings.
That's why I'm wondering.
Yeah. So there is an essence of selling some of their positions to fund that. But they've done that historically for, I don't know, over 20. I think they're dividend heroes, which would mean they're over 25 years.
But are these then is this company then really well in, how is it, buying low and selling high?
It seems to be. Nvidia probably made up a chunk of that over the last couple of years. They've held them for quite a while. Facebook as well, they bought when they were quite depressed. They also own UnitedHealth Group, who we spoke earlier about, and LVMH, which is makes up their top holdings. So I think the majority of it will be selling some shares to fund that dividend.
But that also means that you're really putting a bet on management here.
Yes. And with all investment trusts, management is key, because they're not ETFs, they are actively managed. And one of the things I think I wrote about in our newsletter when I spoke about investment trusts is management are actually the glue that hold this all together. So you need someone with experience, with a track record. And actually you'll find with investment trusts that based on management, when the current management is going to step down, if there's not good succession in place, you can see that share price tumble, because
Yeah,
management
yeah,
is so important in this. And look, these are some of the best in the business. They've been around with the company for a couple of decades, and they've shown a track record of that.
yeah,
When they change management, that's a critical time.
yeah.
Then you really need to know who's coming in, how long have they been in the company, are they aware, and can they follow that track record. But for the short term, management have shown they can do this over a couple of decades, so I'm not too concerned. Not too concerned
Awesome,
about that.
awesome.
The 5-year dividend growth rate, by the way, is 8%,
Yeah,
on top of a starting yield of nearly 4%. So quite
it's
a
not too bad.
good
It's
mix of high-ish yield and a good growth rate.
it's hitting the chowder roll of 12.
Exactly. But I think I like them because we spoke about diversification. Was that last week or the week before? I can't remember which episode that was. And you look at the companies that I hold, I don't own many tech stocks. I don't. And this gives me really good diversification to that asset class. I think it makes up 28.5% of their portfolio. And consumer cyclical also makes up about 20%. And they're two that I'll be really low in my own portfolio. So it gives me a good bit of diversification. It gives me access to companies I won't particularly buy myself. And I get a good dividend and dividend growth out of it. So I quite like this company. It's not mentioned quite a lot in our sphere, but I think as far as investment trusts go, I think this one is top quality.
Awesome. Good. So, interesting one. I mean, I'm not really into that space with my mind yet, so maybe one day I will also dive a little bit deeper into this. But for me, I will start talking a little bit about my one on the wish list, on the buy list. Let's say like that.
Yeah.
I mean, it's Christmas. What do you typically buy yourself at Christmas?
But by myself, you're gonna buy luxury items. You're gonna buy stuff you don't typically buy every day of the week.
Exactly. So this year, I feel like I deserve a bit of luxury. It's been a tough year. I mean, not tough in the sense of hardship, but more like tough in like just a lot of stuff going on. A nice vibe. Made some good money as well in dividends. So I think it's time to buy some LVMH. They're trading at around 52-week lows. I mean, they were under the 600 euros. They jumped up a bit again. But I think I deserve some of that. They have a dividend forward dividend of 13 euros. I don't expect a big hike coming up. Maybe I wouldn't even be surprised if they make it like 13 euro or 13 euro 20, whatever, because it fits really in the situation, and that's what they typically do. They when there's like difficult times for LVMH, they sometimes keep the dividend flat. They did cut it, unfortunately, during the COVID period, but this was also because of regulatory pressure in France in general during the COVID time. So we keep one eye closed to that, but they really continued the trend and even boosted it further in the years following that. Mostly also, of course, driven by what was going on in China, where everyone wanted some of their handbags. Yeah, but of course, LVMH is so much more than handbags. I really love that, for instance, they are also the owner of Belvedere, but also of Rimowa, the German suitcase maker.
Yeah,
I bought them I bought a suitcase, I think, before it was from LVMH. I think they tripled the price since then. That's good. So I locked in my one like 10 years ago, 12 years ago, and I can still walk around with an LVMH case, but I couldn't afford them today anymore. But hey, that's how it goes, right? Maybe a little bit on where the company is now. They had generally, if you look at the first 9 months of this year compared to last year, they have kind of flattish revenue and sales, almost a 10% drop in wines and spirits. But hey, you need a good spirit, so I think that will be fixed again with Christmas. The fashion and leather goods seem to hold up a little bit. It was just a slight minus, but then perfumes and cosmetics was still growing a bit. Watches and jewelry was down a bit, and their selective retailing was up again. So all in all, kind of flattish revenue. I think, let's say -1%, -2%. So and that under all the stuff that we hear that's going on in the world with consumer pressure, I think they're doing quite well. And I really love listening to the CEO, how he talks about I said always prioritizing quality over quantity. They are so much aware of their brand. Yeah, and
Yeah.
that's where I see a clear difference with Burberry, right? Where Burberry became from, because I was looking into Burberry, like what's happening here just before they cut the dividend, and I could clearly see, okay, they started to go more into mass production. LVMH is much more clever there with them. They really understand that a brand has its quality in its own as well, and it's the craftsmanship considered compared no in combination with the desire of wanting something and knowing that normal people can't get it due to price, due to availability, and all of this. And they always find the typical mix there, and they are brilliant in this. Yeah. So you get this stock now for 2.10% yield, and the CEO knows it. He has been buying a lot of shares since mid-November when it dipped around 600 euros. I mean, unbelievable. And we know this, right? A CEO only buys for one reason. Yeah,
Yeah.
because they want to have more of it, and usually because they know, guys, this is not trading at the right price. So he's been buying at 587, 586, 575, 580, 571, 579, and then 604 just a few days ago. Yeah, I know all the shares spiked again. I think it's now trading around 620 or 630. So this idiot here is again probably late at the party. But hey, so be it. Maybe it comes back a bit again. But there's so much to like about this company. Of course, it's a low yielder. But yeah, you account here for the growth, and the growth has been astonishing over the years. I don't expect that the last five-year growth that we have seen, you can extrapolate into the future. I think that would be really wrong to do. I think it will go back to its historical norm again. So probably like high mid single digits. Yeah, there. Once the consumer picks up a bit again and such. But it may also get worse on the short term if we really start seeing a consumer-led recession. I mean, we've been saying this for 10 years. God knows whether it will ever happen, right?
Yeah.
But yeah, I believe I deserve a bit of LVMH for under the Christmas tree. Let's say
Yeah.
like that.
When I spoke about luxury, I was talking about Garmin. Is more my level. But I have a question for you that you may not be able to answer, right? Bernard is 75 years of age.
Yeah.
Why is he buying so many shares at that age? He doesn't need it. He doesn't need that extra money at this stage. What would motivate him to do
that? Love for his company and his heritage.
Yeah. I mean, I don't know what purpose or how long he's going to hold him for, but I just find it crazy at that age he needs to buy so many shares. He's rich.
Yeah, but if you have enough money, effectively, he's probably a dividend reinvestor. Yeah.
Yeah, he probably listens to the podcast.
Yeah. No, but I mean, like, come on, guys. We are also passionate. You're passionate about Liverpool. Why do you buy a jersey every year? Why do you buy dividend stocks all the time? Why not something else? Because you're passionate about it. He loves this company. He knows that everything he buys will stay in the family with that. He's built a legacy. What else would you do? That's what you also see with the top investors. Why diversify?
Yeah.
If you know your shit, if you know your business, if you know that it's in good hands, why don't you help out your kids? One of them will be a successor. I think there are 3 in the board. You make life so much easier for them to keep control of the company.
Yeah, it's going to be interesting when he's gone. We spoke about management of investment trust, but it'll be interesting when he's gone without his leadership.
Yeah,
do they fall into the trap of diversification and making their brand cheaper? It'll be interesting.
So what do you think? Is Succession based on LVMH? The series? You know this one? I think it's from HBO. You should watch it, Succession. You should watch it. The first few episodes are a bit hard to get through, but after that, it's literally an old guy. Oh, no, I think it's based on Rupert Murdoch, probably.
Oh, okay.
Yeah. It's like the guy's CEO, very grumpy, gets sick, and the children, they are so bad. Yeah. And then it's all the time about who becomes the CEO, and you see and one of the sons is like totally crazy. I think even someone gets killed at the lake, and you see how they deal with all of this. I mean, you will love it if you love investing and if you love such kinds of things. you need to get a little bit through the first shows, but after that you really get hooked on. I could really recommend it,
Okay.
Derek. You should watch it.
It's on my list. It's on my list.
Yeah.
I'll watch
For
it.
Christmas when you have a few days off.
Exactly. Nice one. LVMH is a nice pick. My second company is EOG Resources, ticker symbol EOG. They are principally engaged in exploration, development, and production of crude oil and natural gas. I think I've mentioned them once or twice on the podcast. They're a little bit like CME in terms of special dividend, although they're not as consistent with their special dividends. But when they do pay special dividends, it's normally quite big. They've got a fantastic dividend history. I have to say their management are very, very focused on shareholder returns. Very focused, particularly since 2014. And they started focusing on what they call these premium wells. It's giving them more bang for their buck, which means they can reward more dividends, big hikes, and special dividends. Obviously, the risk there is when these run out, where does the money come from? But that seems to say at least the next 10 years anyway. The dividend yield is 2.9%. Dividend growth over the last 5 years is 29.1%, and that's on top of a buyback program, which is about 6.6 billion. And I think they're about 2 billion through that as well at the moment. And what I like about them is that their dividend is covered at a $32 oil price. I don't know what the oil price is at the moment. It's probably above 50, I believe. I don't know what it is, but these are covered at a 32% or $32 oil price. And their last dividend hike was 7% hike, which was due to be paid in January of 2025. So yeah, look, I think it's a really nice company to own. It's a nice kind of diversification, not even diversification in the oil space. They own both oil and gas, and they can drill for both depending on which one is needed in that moment. So they can go for gas, or they can go for oil. So they're well diversified in that. But I will say crude oil makes up the bulk of the revenue. I think it's around 80%. So oil is obviously where the bread is buttered. But yeah, look, overall, it's a nice company to own. I feel like they're severely undervalued. I haven't priced a lot higher than what they are right now. I think I have their fair value at about $200, and they're around $129 at the moment, which, if I'm right, which I may not be, it looks like significant upside, but obviously there is risk around that. But I think management is top quality. I think they're a free cash flow machine, the amount of free cash flow they generate, and the fact that they reward shareholders and say that so clearly in all their reports. I think it's definitely worth looking at. I own a small position. I own about 15, 20 shares, but I would like that to be larger. So.
Yeah. Well, what I noticed lately, you're a lot looking into these American stocks lately, right? While you were focusing more on European, you told me, but every time you come up with American stocks, why is that?
I flip-flop, but I do have UK. So I think UK has definitely been the bulk of where I've been looking lately. But then there's one or two US stocks that I do like. So I tried to balance. I don't want too many US and too many Europe. So it is a bit of a balanced act. But I've got 50-50 here, which is nice.
Nice. Good. Well, interesting one. Again, it all sounds good, but you know how I am. I need to study it myself before I would ever. And my list is huge. But
hey, we can't buy everything. That's
yeah. But hey, why do difficult sometimes when it's just staring straight into your face, just in front of you? So I was in preparation for this show. I was thinking, I want to combine it with a higher yielder, right? I always like to buy a lower yielder when it's like 2%, because my everyone knows, I think, that listens here, my minimum is 2.75%, unless there's a high exception. For me, a high exception is LVMH or L'Oreal. Yeah, those are two examples of high exceptions. But then I definitely want to combine it with a higher yielder to have my average yield in buying. I was looking and I thought, nah. And sometimes you fall into this trap like, I bought it already. I'm a bit bored with this one. And I felt like, but hey, actually, I still have space. And why not now? Because the company that I'm talking about is NN Group. And I don't know. I don't remember when I bought last. Probably it was all last year, not this year. And I felt like, well, the company is currently yielding 7.8%. it got a lot of downgrades last week. And this is what I'm suspicious about. And this is kind of what I don't like about management. Management here really seems to be a bit like those hot shots, right? Or they feel that they are hot shots. They want to go into online banking. I felt like, please stay to your core, right? Diversification. But then also a few months ago, they were caught having some pre-investment calls with analysts. Yeah, and for me, this is like, whoa, this sounds like I said something that's not according to the law, but it seems to be a gray zone. And what happens this week? We get 4 downgrades: one from Kepler, another one from Goldman Sachs, and then one from Deutsche Bank. And I think, like, what is happening here? They all come at the same time, quoting similar things like, the solvency ratio will stay under pressure. For me, it means they got their information from somewhere, which is not clearly accessible to us, because I couldn't find any information, which puts me as an investor at a disadvantage. I really don't like this about management if they are continuously doing this. So I'm suspicious there, just calling it out that not everything is pink and rosy here. But nevertheless, hey, if we look at this business, right, what's good for people to know is that it exists out of several business units, most notably Netherlands Life, life insurance. We all know that life insurance is typically a very rich, very high margin business, because you give people very low yields. You give them a promise, you give them a guarantee on income throughout life, because that's a way how you can protect yourself, right? I also read the book Die with Zero, based on the recommendation, I believe it was from Ron. And there, for instance, say like, okay, via life insurance, you can just buy certain income, a guarantee on certain income. It comes at a price. You will definitely underperform if you would have invested it, but it gives you sleep well at night. And for most of the people, once you die, the money falls away. It stays with the insurance company. That's why it's so good for the insurance company and so attractive. But I guess there's, to some extent, a win-win for people, specifically those that want to sleep well at night. Then there's Netherlands non-life, so typical insurance plans like motor, travel, liability. And then you have Insurance Europe, and this is more like the life insurance in Belgium, Spain, Poland, Greece, Hungary, and Romania, right? So if we look at the main generator of cash flow, it's about 60%, 55, 60% is really the life insurance. And then Insurance Europe, also life insurance, has also been growing rapidly to 20% of that. So about, let's say, 75 to 80% for them is mostly with life insurance and pension plans and such. So people need to know it. They have a lot of exposure to that. Hey, but people continue to get older. People continue to get a need for this. Also, with the current pension systems in Europe, I could see only more and more people getting life insurance in the future. So I think there is something here for this company that gives them enough catalyst to grow. Don't expect a lot of growth, maybe in line with global GDP, because this is a saturated market as well. Maybe they will do an acquisition still somewhere, but I think what is the opportunity here generally just is the valuation still that you get with this insurer as 7.8% yield. It has a 9% dividend CAGR as well, which put it at a 16. I don't believe you will get 9% going forward, but let it be 4 or 5%. You still are talking here about a potential 12% return, right? So for me, this is an interesting company from there. I already own quite a bit. They have been also buying back shares, like in 2020, almost 5%. In 2023, nearly around 6%, which also helps again, right? In the return for shareholders. Is the dividend the safest of the world? No, definitely not. But I think that's why you get some yield in return as well. So I think I will balance off my LVMH Christmas present a little bit with some NN Group shares. Not too many, but just a few again to balance it out. So this is what I will be buying for Christmas, I think. I mean, unless something else surprises me and pops up in front of my face. But this is on my wish list. And let's see what I will be buying then for Christmas in the upcoming 2 weeks. I will let people know in one of the later shows then what I actually bought, because sometimes I have it on my watch list. Yeah, and news people from newsletter, they know what I'm interested in, and there are still 2 other stocks that I'm interested in, but maybe that's more for the newsletter. But doesn't always mean, that's also a disclaimer, that I will buy them then. They're
Yeah,
on the watch list, on my buy list for Christmas, but it can all change until I hit the buy button. Yeah,
exactly.
it's important to mention that. It's the same like when you're a kid. You can ask whatever you want, but Santa Claus in the end will decide what you get. And sometimes they don't give you what you want, they give you what you need. And those are 2
Exactly.
different things.
Exactly. Well, I hope Santa is very, very nice to you this Christmas. Gives you what you
Well,
need.
I wasn't the most sweetest person this year, so maybe I get a book or like a pair of black socks. I mean, if you want to insult me. Oh, and by the way, any one of our listeners that get black socks for Christmas, just remember, this person that gave it to you either doesn't know you and has no idea about what you like, or simply hates you. Both is not a good situation to be in.
there's there's some good advice. So look, there you have it. 4 stocks, 2 stocks each. I would love to hear what's on our listeners' Christmas wish list, what they are buying. So
Black socks.
let's see. Yeah, who makes black socks? Nike or something.
Well,
Let's
if
move
I
on.
get black socks from you, then I know enough, right?
I'll send you white ones.
Well, at
Uh,
least some Nike then I benefit from it as well.
yes, exactly. Listeners' questions. The first one is from Fire Engineer. Do you have any advice about investing or life in general that you know are good advice but you don't follow?
Yeah, have a good discipline in exercising. I'm a team sport player, so when our team is having something, I'm always there. But if there's a season stop because of winter or summer, I'm really bad. And eating healthy, I try to do it as much as possible. But I like so much fried food, like fried shrimps, those Chinese ones. Oh, you can wake
Yeah,
me up for that at night, yeah. And I know it's just poison to my body. So yeah.
yeah. I was similar with sleep. I know you should get good sleep, and sometimes I just don't follow
Well,
my own advice. So
then you need more sex, because after sex you sleep well. At least in my case. Thank you for sharing your sex life. I know enough now. Is your wife listening to this?
no, I think we're safe. I think we're
Okay,
safe.
good, good. So I sleep well, by the way.
You
Yeah,
sleep very well. Yeah, you
yeah.
look very
Several times a
refreshed.
week, I sleep really well.
Hussein has asked us, have we had any resolutions for this year and have you managed to succeed in them?
Well, you definitely didn't. No, so yeah, definitely stick to my plan of dividend investing. I mean, it sounds so simple, this discipline to spend every time, but I've been able to do it, except for the car that I bought. Then I was a little bit strapped in cash, but other than that, I really stuck to it. And yeah, I'm really proud on it, because it's one of my most important goals. It brings me to the place where I desire to be more. So, but of course, I also had exercising on my resolution, and not enough. So it's not so much for me my condition, because it's good enough, but more like the flexibility. I need a
Yeah,
bit more flexibility, that when I bend, that I don't feel old.
yeah. I think for the majority, I think I'd probably reach, but I did have one that I wanted to cook a little bit more than what I usually do because my wife does the bulk of the cooking
Yeah.
and she's quite good at it. But I failed at that miserably. I think I started really well in January and February, and then it just
Yeah.
kind of can't remember if I went away on a work trip. I probably did, and then when I came back, it just died. It just went. It just
Yeah.
went back
Fell
to
into
normal.
old habit.
Fell into old habits. So I think that's something I'll have to reconsider next year. Give my
Yeah.
wife a break.
Yeah.
Thomas Yanka asked us what we thought. He posted an article. I don't know if you got to read it, but he asked us what we thought of it, and it's around this looming debt crisis of America and how historically this has caused the collapse of empires. And I think that the bulk of it is around when they can't afford their military budget, when
Yeah.
that goes, they're kind of at odds, and then that's the breaking point once they can't do that. And it gives, I think it gives 7 levels.
Yeah.
And if you read it, America is somewhere between 6 and 7. So on the verge of collapse. And I'm wondering if you read it, or what are your thoughts
No,
on
but this is also what Ray Dalio is saying, right?
Yes,
He made this video about that typically leads to civil war or international war or something like that.
exactly.
And I mean, what historians are not economists, right? Economists are usually wrong, and there's no billionaire economist almost, and they predicted 10 out of the last one recession. Yeah. So historians, on the other hand, they seem to be quite predicting this kind of stuff all the time. So I'm quite. And so if you ask me geopolitically and economically, one thing that is always in my mind, that what is happening specifically in America around debt is not sustainable. It's really not sustainable. And at a certain moment, they will need to start paying for it. When that is, I have no clue. But this is maybe why also a little bit China became more powerful and everything, because the reliance on the dollar is maybe getting weaker. But now I'm going into a territory where I'm not so, where not my circle of competence is. But generally, it's indeed, from what I've seen and what I've learned, this could lead to the fall of an empire, but I don't think it's too late yet. I'm very curious what will happen now with the new government coming in place there, with Doge and everything, whether they are able to restructure this. There seems to be a sense of urgency around it now, and that's actually a good thing. But yeah, everything is so polarized. So let's just cross fingers that they do something about it and are able to do something about it, and that they get enough time to do it.
Is it too late? We don't know, but we do know that it has snowballed out of control. It is crazy. It's a fascinating read, and when you read it, it's hard not to agree with the author and where they're headed. But as you said,
funnily, I actually bought a book the other day that I started reading, and that is something like a survival guide for when an economy collapses.
Yeah,
and I started reading this for a few reasons. It's based on a guy who was from Argentina, and in 2001 the Argentinian economy collapsed. And I'm just in the introduction sections, but I started reading it because if I look around me geopolitically, and I continue seeing the threat from Putin towards Ukraine, it feels so close. I felt like, okay, I'm totally not prepared for if something happens where I live, in Poland. So I really felt like, okay, at least read a book one time about it, about what I can do in a situation that really shit hits the fan. Give it a 99% chance that it won't happen. But if it is this 1%, I spend a few hours to be better prepared than I am today. So I started reading that. So maybe I'll learn a thing or two about that again. And if other people's have read such stuff, let me know as well, because it's this topic that is deep in the back of my mind, but I felt like I never nurtured it enough. So I thought, like, okay, I buy this book, I read it over the course of a month and see if I learn something here. But then at least I can tell to myself, okay, I know now kind of what to do, and maybe that leads to some preparation action as well. Who knows? But I don't know. I get such an, as the German says, unheimlich Gefühl.
Let me spoil it for you. Just buy Bitcoin. I'm sure that's what it'll say.
Maybe it does. I have no clue.
Yeah. It's it. But isn't it fascinating that that's in the back of your mind in some regards? It just shows.
But it has been since the Ukraine war started. It has been. But I never really gave it attention, and I felt like, this thing just doesn't stop. So maybe I should prepare a little bit, because when COVID broke out, the gas stations here, they were without fuel. Literally, people were loading up their trunks with fuel. There was no toilet paper, anything. So if I at that time wanted to go away somewhere, it wouldn't have been possible. I would have been a lame duck. So I have that also in the back of my mind. When hysteria kicks in, then what do you do? I'm totally a nitwit in this. I know nothing.
I know nothing. Dividend Controller has asked us about questions like, what do you think about stock XX? Do you ever get tired of answering these type of questions?
No, not really, but because first of all, we take our listeners serious, right? Are these always the nicest questions to answer? I enjoy more the knowledge-related questions, to be fair. But what people should know is, like, if we get 10 or 15 questions, we typically can read up a bit on 2 or 3 stocks that we don't know, or that we know a little bit about, but not enough. And some of the others can't not, and that's why we often say, and this is always honest from us, saying like, sorry, we don't know, we haven't looked into it. And maybe we disappoint a listener with that. They had maybe higher expectations by asking that question, but I hope there's some empathy towards us as well, that we do this in our private time. We have an hour to prepare for the show, which takes about everything, the main topic that we have, the news of the week, and then some of the questions. So I think they're sometimes just hard to answer, because you can't just Google one stock and then have an opinion about it. You simply can't.
Yeah, but on the other side of that, we have got some hidden gems out of that.
Exactly, and that's why it's nice. Yeah, that's why it's nice.
So I would not always trust our answers, as you said. Sometimes we could look for an hour at a company, but an hour is not enough to give a good overview. Maybe you look at some of the key metrics and you have an opinion on how the company operates.
The screener, based on the screener criteria.
Exactly, but it's not rock solid information.
No.
Dividend Dad, hypothetical question. If SCHD or some form of ETF was available in Europe with guaranteed dividend growth, would you invest in individual companies or do it 50-50?
Oh, guaranteed simply doesn't exist, but okay, it's hypothetical. We got this question also last week. Definitely, I would buy much more SCHD. And if it would be guaranteed for the next 20 years, I may even consider going all in.
Yeah,
if it's guaranteed, like written in stone there, that I will get at least, I don't know, the average of 12% growth at a 3% starting yield, I would be crazy to not do it. Guaranteed, right? Yes. It means like this hypothetical, guaranteed. I would guaranteed. Be crazy to keep it on the table.
That's like, it's like a bird in the hand is better than 2 in the bush. You have it. You know what you're
exactly.
Going to get. So guaranteed. Honestly, I think ETFs for most people, and we've said this before, is probably a better option. And if you're guaranteed dividend growth, I mean, it's
but this will be just my portfolio. My portfolio is also an ETF in the end. Yeah.
You be called SCHD Dad. I think there's someone on Twitter already with that.
Yeah.
But I think it would make sense if you had guaranteed dividend growth, depending on what that growth is. If it's 1%, maybe that's not good enough. It depends on what the growth is, but let's say it's reasonable, 4 or 5%, and you start with a 4% dividend yield, you probably would take it. Martine has asked us about the Income Factory. You were giving away the book on social media. What have you learned from?
Yeah, maybe not on social media, on Twitter, because I have 25,000 followers. I crossed that milestone. So I just wanted to appreciate that. And with that, tomorrow on Sunday, it's today Saturday, tomorrow on Sunday, I will do the lottery of all the people that retweeted and gave a comment. And so I just started reading on it. So I think you're in a better position to tell me what it is about. I mostly give it away because I know it's a very popular book in the community. Many people read it. So far, what I like about it is just this thinking that, for instance, your shares and buying shares again is actually creating a lot of wealth as well. And I think I knew that kind of already, but the guy who we were in touch with would like to get, I believe, on the show, but we just don't seem to be able to connect well with each other because of the platforms that he's using for communication are totally different than mine, from Stephen Bavarian. But so I hope we will get him on the show next year. Really, it would be really a highlight probably of the year. But so far so good. How about you? You read the book, right?
Yeah, my key takeaway is you can create your own dividend growth. We spoke about guaranteed dividend growth with SCHC, but look, he targets instruments that we can't access over here in Europe with closed-end funds, but we have different types of ways of doing that. But I think it's definitely an interesting. You know, I was influenced heavily. I have a portion of my portfolio directly with this high yielding income factory type of portfolio. So I think, look, you can create your own dividend growth, I think, is what you can take away from it, from higher yielding assets.
Yeah.
And look, we're talking not your 3 or 4%, you're probably your 8 or 9% assets. But look, I'm interested for you to read it and see if it influences your decisioning, your portfolio. Take a higher yielding approach like myself. Will merge.
Yeah, I would argue that my average yield is maybe not that high, but I do have quite some high yielders in my portfolio. Because, like, if you take an N group, is that a high yielder? For me,
Yes.
it is.
Yes,
Yeah,
100%.
exactly. Yeah, exactly.
Keep Walking has asked us about our opinion on French stocks. The two that he gave, or three that he gave, were Pernod Ricard, Remy Contraro, and TFF Group. Any thoughts on
Is Contrail, is this drink, this liquor that you use in a lot of cocktails?
Yeah.
Or the orange liquor, right?
I don't
Yeah, I
know
think
what
it's
colour.
orange liquor.
Orange. I think there's green ones as well, but yeah.
I'm getting thirsty already. I think you put it in a margarita, right?
You definitely put it in a margarita.
Yeah, it's tequila, this Contrail, plus lemon. Then anything else in the margarita?
Is there like salt or?
Yeah, salt on the rim.
Yeah.
Okay, good. I'm just getting thirsty. It's a Saturday evening, so I know I will open this bottle later and make myself a nice margarita.
Yeah. Of the three companies, I've looked at Pernod Ricard. And the reason I was interested in them is that they own Jameson's, which is an Irish whiskey. One of my favorites, actually. I really...
Dude, we become alcoholic because of this show.
Yes, yes.
I drink. It sounds like it, but I only drink once a week. One thing sometimes. Usually Saturday is my cocktail evening.
Yeah.
Yes. So I'll it's going into my head now because it's like past 8 o'clock now. So it's like really in front of me soon.
Cocktail time. But yeah, like I said, I looked into Pernod Ricard. Really nice company. What I like about them is that they buy brands, and what they do really well is when they buy a brand, they manage to keep the heritage of that brand intact. So they buy Scottish whiskey, they buy American whiskey or bourbon, they buy Jameson's from Ireland, and they never lose the authenticity of it. Like, I never knew that Jameson's was owned by a French company until I went looking at it. There's some Scottish companies or whiskies as well that I never knew they owned until I researched them, and it's quite nice how they managed to do that. They're in a bit of a difficult moment, I would say. China has really stretched their liquidity, so they're really, really stretched, definitely in the short term. Which, if you read Moody's and the credit ratings, is kind of putting their credit rating under pressure. Now, they have, in fairness, the credit ratings have given them a little bit more leeway because historically they get through this. They're aware of the pressures in China, and they have confidence in management to turn that around. Interestingly, they're trading at a price that I would find attractive. When I studied them a couple of months ago, they weren't. It was kind of fair value to a little bit overvalued. They've dropped a lot since then. I think they're around 105, 106 euro mark, which is quite attractive. So look, the risks are around China. We spoke about LVMH, we spoke about L'Oreal before. Same type of risks. Their liquidity is kind of putting their balance sheet under a little bit of pressure, but I think it's an interesting option, and you're getting a decent yield on them at the moment. I think you're getting nearly 4 or 5% yield because of that. So if you're willing to take the risk, they've got strong brands. It might be worth revisiting. The other two I haven't really looked at in detail. If I'm honest, I've heard good things about Remy, but I haven't looked at them to give enough of an opinion. But Pernod Ricard is definitely on my list. I bought one share a couple of years ago, only as a token of appreciation to Jameson's. But honestly, Diageo looks probably still overvalued, and Pernod Ricard is a decent option there. So yeah, on my list, on my watch list, I would say. Iran has asked us our thoughts on Lidl Basel Industries, ticker symbol LIB.
Yeah, I briefly looked into them, right? We got the question last week as well. So the company's now trading at around $76, I believe. Interestingly, because in April it was still above $100, but they really started to go down in October. I believe it was around the third quarter earnings. Must have been. I think so, because the issue, I guess, why it went down, or if it's related to third quarter earnings, has really to do with the weakness in China. This company is just feeling it. It's sensitive to economic cycles, and this has put its earnings under pressure. Right, America is doing quite well, but specifically China is having a tough time, and also I believe the company is really looking at alternatives for its European operations. They call it exploring strategic alternatives.
Ah,
Yeah.
nicely put.
So I guess that's what's going on. Yeah, and the question if this is the right time to buy, I don't know. I think I will make a dividend stock card about it, but it means that I need to do still a little bit of I said going through the 3 financial statements and a few more things. So
yeah. Remember, these guys went bankrupt before. It's always in the back of my mind when we speak about it.
exactly.
It's
But
hard to get past
on the
that.
other end, Ahold Delhaize had also once fraud that nearly made them bankrupt.
Yeah,
So,
true. And industrial gases are under pressure. I think industrial production in general is under pressure. So there's a lot of things going on, a lot of macro.
yeah.
I think it's one of these companies, and we don't speak about macroeconomics a lot. We did a show on it.
Yeah.
But it's one of these companies where macros actually are important. I think
Exactly.
so
Exactly.
it's difficult to take sometimes. David Abraham has asked us to look at Traton SE. And honestly, I've never heard of them until we read this question. I looked them up, and the first line I saw was Traton SE, formerly known as Volkswagen Truck and Bus AG, and that's as far as I went. If I'm honest, I mean, the car manufacturing, truck, bus, all that kind of industry doesn't really fill me with confidence, and it's an industry I don't typically want to get involved in. So honestly, I don't have any interest in this type of company. I'm not sure how you feel on it, but I didn't go any further than that.
Yeah, no, I would not be interested in either. And what's happening now with Volkswagen, I was reading an article about the CEO, how he's now dealing with the workers' council and trying to negotiate something. It's insane. I mean, this company has so many barriers to compete, with German legislation and everything. It's really concerned about this. The news lately that's coming out about the German economic, well, it feels like it's falling off a cliff if you need to believe the news. I guess it's not that bad, but oh my God, what's going on there? I mean, anything that has to do with car industry at the moment, like you say, and I'm sorry, maybe we are throwing here the baby out with the bathwater, right? Maybe trucking is a secular growth wind for whatever reason, right? But just because of that, I'm already hooked off. So
yeah. We got a question from Remy, and he's asking us, what are our 5 top favorite UK stocks each?
Top five. Well, they must be in my portfolio. But I would say, unlike popular belief, I actually like my legal in general. I really like the yield in the combination with the safety it provides. Also the clarity of the dividend growth. So many people are concerned about it because the share price is dropping and they think like there must be something wrong with this company. I really like Game Shop. No, not Game Shop. This war with the war games.
Yeah, GameStop worship, isn't it?
Yeah, something like that. I really like that one, but that's more the love for the type of business that they are in, but they're just not a stable dividend grower. I like DCC, of course, DCC PLC.
Yes. They're Irish, but I'll forgive you.
Yeah, okay. Potato. and Spirax, yeah.
Okay, yeah. 5 that I actually had 6 on my list. British American Tobacco, because they always make tomorrow better. BAE Systems, they've got a strong airline, a strong military kind of aircraft I would say, and good back orders. Greg's, which I spoke about as a growth option. I have UKW in there, UK Wind. I'm still bullish on renewable energy, but they're struggling at the moment. And Spirex, and I also had JGG, I always spoke about earlier, JP Morgan Growth and Income Fund. So they're the ones that I like at the moment. But you know what? There's lots of really good companies in the UK at the moment. That market is probably, yeah, it's probably a lot undervalued. There's probably a lot more that we could add to this. And look, there's tax advantages to a lot of people for UK, so it could be quite the market. But what's interesting is, I know you don't follow it, but the AIC, who are a fantastic resource for investment trusts, they sent out a monthly newsletter, and part of that was the end of year, and they had these fund managers. I don't know how many, maybe there's 100 or so, and they ask which sectors are going to outperform or which regions will outperform. The UK was always number one over the last 2 or 3 years because of how undervalued they were. They have now changed their mind and put UK number 2 and moved to America, and specifically the healthcare segment in America, which I thought was quite interesting, right? But yeah, let's see. But yeah, UK definitely has some nice companies. Eric Mead has asked us your favorite UK stocks at the moment. Hey, we just answered 2 questions in one. So that's that question. And Anders Stogard, what are your thoughts on the healthcare sector in general, with the chance of the US administration come January 2025?
So I would watch out for insurers in general. But first of all, I think that the incoming administration will be pro-business. Yeah, so let's not forget about that. I think when I think about, if we are talking about this Robert Kennedy, or what's his name?
Yeah.
From what I read, he will be probably more attacking sugar and bad eating habits and all these kinds of things as well. So actually, I would be more concerned than about the likes of Pepsi and such. Yeah. But from a healthcare point of view, well, it's a fact that most pharma stocks, they really earn their business in the US due to drug pricing there. So I think you could consider it a winter for such stocks if really something would come out of that, if they are able to turn things into policy. But how's it? I don't know. It's not like the healthcare sector is heavily overvalued, actually, right? It's one of the more attractive ones because many stocks struggle with their pipeline. So I see more the pipeline as a problem when we talk about big pharma than upcoming policy. I mean, you first need to have something to sell before you can think about the drug prices.
Yeah, exactly. Yeah, interesting, right? And as you said, it's attractively valued, and interesting to my previous point that all these fund managers in the UK believe that this sector is going to outperform the rest going into next year. So let's see.
I think it could maybe put insurers a bit more under pressure. But for us, if the dividend is safe, it will mean buying opportunities.
Exactly. Dennis has asked us about Lam Research.
I'm not so into the chip industry.
Yeah, it's a name that keeps coming up, but I've never looked at them because the yield, I believe, is 1% in around that area. Too low, so it's not on my radar. Carlos has asked us about AXA. What do you think about AXA Insurance?
Well, I remember AXA as a child growing up. The bike locks in the Netherlands, you don't have chains like that, but you have those bike locks that are over the wheel, and there was typically a label of AXA on it. That's what I think about AXA. If we think about the French insurer in itself, it doesn't have a stable dividend track record, and then I much rather take Allianz or something like that.
Yeah. I think I posted a link to their dividend history. It looks like they've cut it 3 times in that period. My childhood with AXA is always around the FA Cup, and when Liverpool won it, they brought the FA Cup down to had an AXA office down close to where I live, and you just queued up and got a picture with it.
It's funny how this company has both had an impact and a memory on our childhood.
Yeah, I still have that picture somewhere.
Nice.
Medrad has asked us about consumer staples. What top discretionary companies are you watching and hoping to load on future drops?
Not a lot. At this moment in time, it's not really a sector that I'm actively looking at.
Yeah, Target was interesting. I think we spoke about that.
Yeah.
In terms of consumer staples.
Yeah, at Target, I bought some after the 20% drop, but yeah.
Nice one. So that is the last question. Thanks as always to our listeners for all the questions. We look forward to hearing your Christmas wish list.
Yes.
And we will see you all again next week. Remember, both of us at Dividend Talk are not certified financial specialists through formal education. We are just two guys sharing our journey for inspiration and entertainment purposes. Hence, this is not investment advice. Although we do our best, we can't promise that the information discussed is always correct, nor appropriate for you or anybody else. We always recommend that you do your own due diligence and be accountable for your own choices. As we always say, you can't borrow conviction from others. Last but not least, by listening to our podcast, you agree to hold us harmless from any ramifications, financial or otherwise, that occur to you as a result of acting on information provided in this podcast.